Hi, everyone, and welcome to today's session. On behalf of everyone at Rev.io, I'd like to thank you for joining us today. I'm Delaney Dabkowski, Rev.io's Field Marketing Manager. Before we begin the presentation, I'd like to go over a few housekeeping items. First, audio will automatically come in through your computer speakers. Second, a recorded version of this webinar will be emailed to you within 2 days. Third, we'll be having a Q&A session at the end of the event, so please submit your questions via the Zoom control panel at any point during the live presentation. For those of you just joining us, welcome. Today, Dan Driscoll, CRO at FAStek, and Karen E. Wilkins, Director of Compliance, will be discussing how to build a detailed checklist to achieve dependable telecom tax compliance. Dan is the Chief Revenue Officer for FAStek Compliance Solutions. Before joining FAStek in April 2021, Dan spent 2 decades in the telecommunications industry, building and leading successful sales and marketing teams. He was responsible for creating customer-driven successes at MCI, KMC Telecom, Hickory Tech, and several more. Karen has spent the last 3 years automating manual processes using Alteryx and Blackline. She also has 12 years of experience implementing new indirect tax clients and managing the indirect tax and regulatory tax compliance process for the Thomson Reuters and KPMG. Karen received her bachelor's degree from the American Intercontinental University with magna cum laude honor. She also received her Blackline Account Reconciliation Certificate and the Six Sigma Green Belt. Without further ado, I'll turn it over to Dan and Karen.
Thank you, Delaney, for the introductions. Hello, everybody, and thanks for joining us today. Karen and I welcome the opportunity to provide you some best practices to kind of help you get tax compliance. I wanted to let you know a little bit about how I came about developing the agenda for today. As Delaney said, I'm new to FAStek, but in the short time here, I've had the opportunity to speak to many customers and prospects. And in these discussions, I've received many questions associated with telecommunications taxation. So our objective today is to try to answer some of those questions for you. As Delaney mentioned, Karen has many years of telecom experience, so she'll be delivering the major substance of this presentation, going through the 6 steps of compliance. So let's get started here. So first, my part is, I have a little part in this, and it's really to talk about the basics of telecommunications taxation. One of the questions I receive often is, can you give me an overview of the perspective of what telecommunications tax and regulatory obligations are? I will try to answer that in a question over a few slides here. First, you should know that telecommunications is a highly regulated and taxed industry, as most of you probably are already aware of. And actually, telecommunications is one of the most heavy tax services in the United States today. But you must also be aware that the tax laws, as you know, are always kind of behind the technology because the technology is changing so fast. So it's always, that means tax laws are basically changing constantly also. The extent to which telecommunications is taxed is really great by this slide. There are hundreds of taxes and tens of thousands of tax jurisdictions that you have to keep up with. Thus, to many of you, it probably seems like it's an overwhelming task to do internally, as well as externally. It's something for us to keep up with constantly also because there's so many jurisdictions out there today. So if you learn anything from this webinar today, I would say that is not to take telecommunications tax compliance lightly. The results can really be a lot of penalties, interest, tax expenses that really can reduce your profitability and your goals. So it's an important part to have a plan. And one of the things we want to try to accomplish today is to provide you some of the best practices and steps to have a plan to tackle this, overall objective in your company. For the types of taxes, there are many. A few of the taxes you will encounter are basically your federal and state universal service fees, your federal excise tax, state and local sales taxes, state and local and E91 taxes. And then there are many very specific state and local taxes that you're going to have to run into and kind of research and discover and make sure that it's in your tax compliance. And the other thing is there's a potential really for a lot of small transactions when it comes to telecom taxes. And so you really need to build an automation and a system that can handle a vast majority of taxes, even though they're minimal in some nature. You still have to be compliant when it comes to taxes. There are basically 4 major government agencies that you're going to be working with. Our favorite, obviously, is the Internal Revenue Service. You'll be basically working with that organization. Also, the state and local government, the departments of revenue and associated taxes with those departments. The FCC, obviously, that everyone needs to be compliant with. And then there's many state public utility and public service commissions that basically manage a lot of the fees on the state level. And then on the sides of this, many state commissions and local agencies have their own taxes. And how they apply them, that makes a need for to stay abreast of many of the different laws, both all the way down to the local level. So you can see that there's a lot to basically overcome when it comes to taxation at all different levels. So what does this all create for you? It really kind of creates a need to have tax expertise to keep up with the ever-changing tax landscape. You will also need automation to help you efficiently process potentially hundreds of tax filings each month, as well as invoicing your customers. You also need resources to manage the processes and programs each month. And then finally, you'll need the ability to audit all your processes to determine if you are compliant each and every month. So what we're going to try to do in the rest of this presentation is kind of go in more in depth into these various topics and see how basically we can help you kind of look through some of that. But before we do that, I always feel it's kind of a fun thing to do from an interactive standpoint in these presentations is to take a quick poll. So Delaney is going to help us kind of give you an opportunity to take a poll of what is the hardest part of managing your taxes for your business today. So I see you have something on your screen here that you can kind of select one of the 6 options. We'll give you a couple seconds here to take that poll and see if we can get results back from it. I don't know if we're going to get results back. I thought we were going to, but oh, there they are. As soon as I said that. So really, you're kind of just keeping up with the taxes and the laws. And obviously, that is a big thing that we hear all the time, that because of the magnitude and the various jurisdictions that are out there, it's really difficult for organizations today to keep up with all the laws and regulations. And then basically your second one is kind of determining all of the above is the second one. And that's true. I mean, it's a complex thing that you have to kind of understand all these components, invoicing and remitting and keeping up with tax laws. So it can be overwhelming. So I think today what we're going to try to do is give you some insights into maybe how you can tackle these various areas that you just took a poll on. So I'm going to bring Karen into the conversation now. She's going to take us a little bit more in depth with some of the finer points of tax compliance requirements. We're going to kind of get down to what we kind of call our 6 checklist items that basically that are really good best practices for you to kind of walk through and maybe think about as you kind of tackle this program within your company. So Karen, I'll kick it over to you.
Thanks, Dan. Appreciate it. Good afternoon, everyone. As we start our discussion of the 6 checklist items, you're going to discover really that 6 items are really only the tip of the iceberg of what you should consider when evaluating your service offerings for the different compliance implications. We will start our journey with discussing the federal, state, and local requirements from a determination perspective. We will then proceed on to certification and registration with the different taxabilities. Dan will, towards the end, will also provide you with an overview of the calculation, invoice, and billing of the customers. Finally, I'll present on the interesting world of tax compliance itself. So you can stay on this side of Dan. Before we start discussing really the Universal Service Fund, I wanted to kind of provide you, if you go back one step for me.
Okay, sorry about that.
No, you're good. Okay, thanks. As you may know, the Universal Service Fund was initially created to subsidize low-income households in high-cost regions to make sure all customers, consumers had access to nationwide communications. Since the Telecom Act of 1996, the federal USF was expanded to provide affordable service to rural healthcare providers, schools, and libraries. There were 4 mechanisms were created to support these initiatives. Now, the high cost, I'm going to go over those just briefly. The high cost support mechanism provides support to certain phone companies that serve areas where it is most costly to provide service. The low income support mechanism assists low income consumers by helping to offset monthly phone charges. Now, the rural healthcare support mechanism allows rural healthcare providers to pay lower rates for service comparable to those rates by city providers. Now, this initiative makes telehealth more affordable. Lastly, schools and library support mechanism provides telecom service, internet access, etc., to eligible schools and libraries. And it seems like a long list of mechanisms. However, there is more. When you report to USAC, you will receive an invoice for telecom relay services, the North American Numbering Plan, the Local Number Portability Administration, and the Interstate Telecom Service Provider regulatory fees. That's a lot to really remit for just one jurisdiction. Actually, it's 8 jurisdictions. But really, what does this mean to you? So for prior, you'll need a system in place to collect the USF and the previously mentioned surcharges from your consumers, and then remit them to the appropriate agency. For the federal USF, all wholesale, retail, intrastate, interstate, and international providers must file the 499A. Now, you as a provider will report projected and historical interstate, interstate, and international again revenues on a quarterly basis as well. Now, the big one, the 499A filing due on April 1, requires a breakout of each service type. And in my opinion, the 499A is probably the most complex return to file as a provider. I know that some people on the phone would probably agree with that. Although you will not submit a payment with your 499A, USAC et al. Will also send you an invoice based on whether your projected and or actual revenues for each mechanism. It's important to apply the correct rate to your customer invoices. Now, as if the federal filing requirements are not enough, I'm going to tackle on the state here a little bit. Multiple states have enacted their own funds, each of which had similar mechanisms in place. So now there's some relief for some of you providers who are just starting out. Currently, if your calculated annual contribution to the federal USF is less than $10,000, then this will qualify you as de minimis status for the year. Although you might find the status applies to you, this does not relieve you of your TRS, your local number portability, the NANPA, or ITSP obligations. Nor does it mean that as a reseller, your underlying carrier will not pass along the US charges to you. So next slide, please. All right, so some of the things that you want to ask yourself about some of the state and local tax requirements. It's like, all right, so for some of these answers, you may want to inquire within your organization or to maybe outside firms for assistance when you're trying to answer some of these questions. But really, it's you should ask yourself, what services am I really providing? And are they regulated at the federal level? And am I regulated at the state and local levels? Again, it's all based on the services that you're going to be providing. Now, this is a question that really determines what taxes you need to collect and remit. Then it's like, how do you start with the next step in this adventure, right? If you determine that that service is regulated, you need to either enlist assistance from internal legal or external firms that can assist with certifications and qualifications. We'll address this component just a little bit more in detail a little bit later. For non-taxable sales are based on a product of the service you're selling. And it means that basically that product or service is not taxable in this specific jurisdiction. The most common are companies who purchase products or services who are then reselling them to the end user. It's often confused. Now, exempt sales are based on the end user making a purchase. The end user has determined that they are exempt from paying sales tax. Some types of organizations that may be exempt from sales tax are charities, government, and religious organizations, to name a few. And again, we'll kind of cover those a little bit more down the path. So if you go on to the next slide for me, Dan. The types of taxes. As Dan kind of mentioned earlier on, there's a crazy amount of different tax types out there. And of course, he only named a few, but on this slide, you can also see there are additional other ones. So for me, let's talk about a little bit about kind of the common thing you're going to hear about in this webinar is that you as a provider need to determine that the service you are providing is taxable and or reportable. And as we all know, it really just depends on the state. Now, as an example, voice over IP is delivered over the internet. It doesn't mean that it's not subject to tax or other surcharges. Now, although regulated differently throughout the United States, voice over IP can be taxed at all levels, interstate and local. And as one example, the California Department of Tax and Fee Administration fees does not tax at the state level, but there's many cities that apply a utility users tax to voice over IP customers. Now, states define telecom service differently, right? For example, Maryland, taxable services only include mobile telecom service, prepaid telephone call. But of course, today they may change their mind and may define it as something else. And that's something that Dan referred to earlier on when he was talking about the ever-changing world of regulation. Now, some types of service that may not be considered telecom, but may be taxable are installation or repairs, data processing, information services. Now, are all revenues interstate taxable? Again, it really depends on the state. Although some states do not have a sales tax imposed on communication services, there are a slew of other types of taxes. For example, Florida, it does not impose a sales tax on communication services. However, they do impose a communication service tax that is inclusive of state sales tax. Of course, we'll talk about some of these other fees later, but there's another example, Texas. They apply a right-of-way fee in about 1,000 local jurisdictions. And over 250 cities in Missouri impose a local license tax. Something to think about as far as all the different types of taxes and fees and surcharges that are possible depending on the service that you're providing to your end user or your customers. Next slide, please. Okay, from a legal perspective, and I'm not a lawyer, I don't want to be. I know for greater people who are definitely awesome lawyers, but I do want you to consider who is responsible for the tax, whether it's collected from the customer or passed through the customer, or not passed through the customer. Now, your customers are responsible for paying sales tax to you, or pay sales tax to you, the provider. That you have a responsibility to report and remit tax to their appropriate jurisdiction. There are some surcharges that may be passed through to the customer, such as gross receipts tax. This tax is based on the total gross revenue, regardless of source. It's imposed on the provider, although it is eventually passed through to the end user. Now, another example of legal incidents is not being able to pass through tax to your customer. In this case, you, the provider, will be responsible for remitting directly to the jurisdiction and not allowed to pass that tax on the consumer. For example, Washington doesn't have an income tax, right? But a business and occupation tax is remitted to the state based on gross income from activities conducted within the state. So yes, that would apply. Now, we're not going to get into an ever-changing world of nexus determination, but some thoughts to kind of keep in mind. It's like, do you have a physical presence in that state, like a retail outlet? Do you have employees or direct sales personnel living in the state? Nexus means that you have a presence in the state and you must remit. It could also be determined if you have independent contractors, or independent agents in the juris. Now, if you find you do have a nexus, then it is your responsibility to report. Even though you may think that you have nexus in a particular state, however, as a provider of telephone service, if you have customers in the state, then you must collect and remit taxes. Sounds kind of contradictory, doesn't it? Now, maybe you feel that you are excluded from collecting or remitting tax because you're reselling your services to another provider, who in turn is selling the services to the end user. Now, if that provider is not collecting tax or surcharges from their customers, that responsibility can fall back in your lap, and you'll need to remit those surcharges on behalf of that reseller. Now, this is where resale certificates, whether it's a multi-jurisdiction or a specific state, are extremely important, but we'll discuss this in our next slide. All right, so I'm trying to figure out where to turn my volume. I'm hoping you guys can hear me okay. Now, as it relates to sales for resale and exemption certificates, right? You're required to charge sales tax on any transaction or service that is subject to tax unless a jurisdiction has ruled that the customer is tax exempt, or your customer qualifies for an exemption as a reseller of the services that they are purchasing from you. Now, as a reseller of communication services, you may think that all you need is a standard sales tax resale exemption. However, you would probably most likely need to provide your underlying carrier with a separate exemption for each 911, USF, communication services taxes, excise tax, regulatory fees, the list keeps going. Now, although the multi-jurisdiction exemption form may cover you for some states, there are other states that will require you to apply for that exemption directly through those government agencies. Now, it's important to obtain and maintain these certificates based on the jurisdiction requirements, where they may be needed to be periodically removed. But as a couple examples of state application processes, Washington, you need to apply Washington for a reseller certificate. Now, they span for 2 years. And now Florida, the communications and sales tax reseller certificate is applied for separately, but each span 1 year. So you would need to have them, or they would need to be renewed every year. Of course, if you're reselling communication services, your underlying carrier may request exemption certificates for different types of tax. Again, the 911, sales, FET, federal USF, the TRS, the PUCs, and the list goes on again and on and on. So, Dan, if you go ahead and go to the next slide for me, please. Now, we kind of, on an earlier determination slide, we kind of summarized the agencies you'll be working with and getting registered. Now, if you've already received your federal tax ID number and you're just starting out, then you'll need to want to complete the Secretary of State qualification request of applicable documentation. At a minimum, you will need to provide ownership and officer information and proof of incorporation. And there's typically fees associated with some of these as well. Of course, all this comes with a price, right? In addition to the Secretary of State agencies, the Public Service Commission also have filing fee requirements. Once you receive approval from the Secretary of State, we're kind of moving through this slide, you can then proceed with certification with the state public service commissions. Now, depending on your service type, it could be as simple as notifying the commission that you'll be providing service in the state. Although in a lot of cases, you'll need to apply for a certificate of public convenience and necessity, referred to as a CPCN. Now that includes filing for writing tariffs, Secretary of State qualifications, fees, and possibly even bonds. But let's not forget the sensitive nature also that may be required for those. You may have to provide officer social security numbers, personal identifiable information. But anyway, just when you think that you're done with all the paperwork, now you have state departments of revenue, state USF administrators, state and local 911 boards. You got cities and villages to contend with. Now, more tax registrations are needed for the state departments of revenue and USF administrators outside of the Department of Revenue. And those are like SOLIX and GB&W. Again, they are administered by the USF for various different states. Now, for Alabama, just use an example, you need to register for utility gross receipts tax, sales tax, prepaid 911. Of course, that's all through the Department of Revenue. But yes, for most states, they will require you to qualify with the Secretary of State first, so you don't want to skip that step. For the home rule states, where the localities, the locals, the districts, they collect tax directly. You might also have to register for some of those. Of course, those home rule states are your Alabama, Colorado, Louisiana. As an example, Louisiana parishes require registration for their sales tax for each parish. So as we move forward, I'm going to go ahead and pass the torch on to Dan, who's going to talk about tax speculation and billing.
Yeah, as you can tell by Karen's comments and in her deep analysis of all the taxes, there's certainly an awful lot out there. And so it's back to what we kind of talked about previously is automation is really a key component to consider when it comes to taxes. One of the automation components is a tax generation platform that will help you invoice customers the appropriate taxes, and also provide accurate information to complete your tax filings. So a few of the considerations to be aware of when evaluating a tax calculation or a generation platform for you to be, for your company would be, first, it really needs to have a robust inbound and outbound functions to communicate with your billing system. So you definitely want to make sure that the interfaces between your billing system and the tax generation system is robust and what you need. Second, your system really needs to be updated from a tax research database to keep you up to date on what the taxes are on the products and services you're offering. It certainly needs to have a robust tax calculation engine to make sure that you're receiving timely calculations of your taxes, both with your customer invoices, as well as, and finally, a reporting system that provides you accurate and timely information to file all your taxes. One of the important services that basically we recommend that you really need to more likely outsource is the tax mapping Tax mapping experts have the ability to map all your services into your appropriate tax requirements to make sure that you are compliant, but more importantly, to make sure that you aren't taxing or overtaxing your customers related to your services. So it's something that we believe that even in, from a maintenance standpoint, you should look at how your taxes are mapped to your products and services almost on an annual basis to make sure that everything's up to date, because tax laws change as well as your products and services has changed. So we really kind of recommend that that's something that's part of your overall program. The other platform from an automation standpoint that's critical is really your billing system. It should have the capabilities to apply, certainly with the truth in billing laws, and be able to pass transactional data to your tax calculation solution that I just kind of talked about. And so it's really important that those two systems are working hand in hand together, and the interfaces are robust. And then you're basically you're doing what you need to do when it comes to the best practices of invoices. You really need to make sure that your federal taxes are presented on your customer invoices in a clear manner. Also, make sure that you're separating federal and state taxes on your customers' invoices. And then finally, just kind of, you really just need to make everything as clear as possible in the invoice and abide by the truth laws that are out there. So those are some of the things from a best practices and an invoicing you really need to make sure that is in your billing system and you're invoicing the correct way based on the laws out there. So back to you, Karen.
Thanks, Dan. So now it's time to report, right? Remit your tax to the jurisdiction. Now, if you'll be performing the compliance process internally, then some planning is needed even before you start completing the forms. Of course, the items I'm going to talk about is just, again, like the tip of the iceberg. There's so many nuances to making sure that you've set up to report correctly. But one of the most and key ingredients is identify the internal sources of your revenue and your tax data. I mean, ideally, you've already been communicating internally and getting the data details. Ultimately, you will report tax to multiple authority levels: federal, state, local district, city district, county district. You'll need your tax data at level at best. Now, you also want to create your form and work paper library. There's, like Dan mentioned, there's basically a gazillion different reporting jurisdictions with different forms that need to go out on a monthly basis or even, more frequently. Now, you want to also create your tax reporting calendar. Now, this calendar really should include your tax identification numbers that were issued by the Department of Revenues or the localities. You want your filing frequency, so if it's going to be monthly, quarter, annually, or quarterly deposit, wacky New Yorks. You got your filing methodology. It's going to be paper. Is it going to be EDI? You want your payment methodology. So that would be, am I going to mail a check out? Am I going to file? Am I going to send a wire? Am I going to send an ACH debit or ACH credit? Or are they going to come in and take the money from my account? Basically, you want your electronic filing and remittance login information as well. You want your prepayment information as dictated by the state if it's necessary. Of course, you also want your deadlines for your prepayments in your returns. So if the return is going to be due on the 10th or the 30th, it's important to keep that, especially as you grow your business and you're becoming more and more required to report to various different jurisdictions. And of course, if necessary, you might want to have a separate bank account to facilitate the ACH, the wire, and the check payments as it relates to all your transaction tax remittances and even your regulatory remittances. So now that you see where I'm talking about for the plan stage, and say you're getting ready to start the return preparation and tax remittances. But also, I want you don't forget to allocate time and resources into addressing the notices that you most inevitably will receive. Even if you had perfect compliance, you can always count on receiving jurisdiction mail containing various due date reminders, frequency changes, rate changes, your address changes, even audit notices. And we try to prevent those, right? Okay, on to the next slide for me, please, Dan. All right, so now this is the detail, right? Now that you're prepared for compliance, you've done all this great planning, there's some additional components that you need to consider. Because of the various different tax types, the data must be very detailed. Typically, for the data, you'll need, and this is not necessarily a perfect world, but it'll be a good world for me, who I love my data. I need my tax type. I mean, a tax type description. I need the authority level, whether it's going to be federal or state or city or county. You want to have your geocode of sale or your zip +4 or city, county, district, state for accurate reporting. Your tax rate that you are charging, your tax amount. I also want to see any non-taxable and exempt revenue. I want to know what type of those exempt revenue they are. I want to see the gross revenue, taxable revenue. Of course, any additional details that would facilitate reconciliation or provide audit support down the path. Really, the more detail that you have, the better you are to deal with some of those requests. Okay, now we're ready to prepare the tax returns. We've got all the data, we've massaged it. So really depending on how much bandwidth your tax department has, you may also want to structure your returns to be prepared by the due date. So you might want to file your 10th first, then your 15th, and 20th, 25th, and then 30th. Of course, they all fall within that between, basically, most of them fall between the 20th and 30th of each month. However, there's some that are due as early as the 10th. And of course, if you are required to make 3 payments in Illinois, the first one is due on the 7th of the month. Now, of course, now you need to identify the specific data that you will need to prepare for that specific return filing. If you're preparing a Corpus Christi, Texas 911 return, you'll need to identify the 911 tax type and city and the total 911 tax for that specific jurisdiction. And that's just one tiny little 911 return. Now, some returns are so complex that you may find yourself preparing separate work papers for each one. A handful of state returns do not require an allocation by locality, but most do require revenue information by county, city, special districts. And Colorado is famous for that. So a majority of our states mandate online filing. So as far as how you're going to prepare them, some county and cities are actually mandating you to file online. Some states accommodate an upload file. So there's a possibility that you could prepare an upload file. Of course, some of those come in, they want it in an XML format. It can't just be like a common delimited simple file. But where a lot of the other ones, they must be hand keyed online anyway. Now, there are some local jurisdictions within the home rule states, including Alabama, Colorado, and Louisiana. They have their own individual returns that need to be completed and mailed. So keep that in mind. We kind of earlier talked about the little utility taxes, Missouri, California, 911. It's crazy about how many returns are out there. And as you broaden out and as you expand your service territory, you'll become more and more aware of this. Now it's time to process your payments, right? State and localities may mandate ACH payment. They don't want to see a check. It could be an ACH debit where I'm allowing the jurisdiction to come in and take money from our account, or maybe ACH credit, which a lot of companies prefer to do. They want to send the money to the jurisdiction. They don't want the jurisdiction coming in and taking money from the checking account. Now, blame them, right? Also, there's check remittances. You got to cut a check. You need to, put that in with the return itself. You could put it in an envelope, stamp it. Of course, keep in mind that some jurisdictions, they don't accept a postmark, right? They don't, some of them don't. So in those postmarks, those exceptions to the rule, you may want to overnight. Just that way you can say, okay, I found that it was delivered this date, this time. Again, additional support in case they come back and say, oh, you were late. Of course, now that you think you're really, a compliance is kind of over, right? But it's really not. Maybe for you it is. It depends on how you have if your tax and accounting departments are combined or separated. But hopefully you've tracked the payments that you've made. You've tracked the rounding that you've had to do, because some jurisdictions, you report up to whole numbers, not just the dollars, not just the pennies. So they have the rounding, and you have discounts received during preparation and filings. Now, it is important to balance your internal general ledger accounts. So you want to post your gross payments, your gross tax payments, to offset your accrued tax liability accounts, right? And then you also want to post your income for those vendors' discount that you get for timely filing. And then, of course, you also have to post your expense for any penalty and interest, local license renewal fees applications. So that's kind of all kind of the beginning of the compliance kind of to the end of compliance. Now, as far as the seamless process on the next slide, basically wrapping up. Sorry, Dan. Next slide, please. Thanks. So we've kind of covered the high level requirements for market entry, and tax determination, collection, and remittance. Now we started providing you with a summary of the Secretary of State Public Service Commissions, the Department of Revenue registrations. When these registrations are completed, you'll need to begin preparing the necessary remittances, whether they're tax in nature or regulatory. Now, completing the compliance process internally can be overwhelming and frustrating. The time needed to compile your library, massage your data, maintain your calendar, process payments and returns, that really can be quite consuming. You might want to consider partnering with an outside firm or consultant to relieve you of that compliance burden. Next slide, please. All right. And we kind of tapped on exemptions earlier here and there. But really, some additional considerations are that if you're a current reseller or contemplating a reseller communication service, you may be exempt from federal USF fees, right? However, there are other requirements to register as a reseller with the Department of Revenue, then possibly apply for a resale certificate with the states. Now, your underlying carrier will require you to complete reseller exemption forms on a regular basis. Again, I'm just kind of re-summarizing what we previously discussed. On the other hand, if you are, as a reseller, have exempt customers, they will need to provide you with their exemption certificate that you will then maintain and request for regular renewal. Of course, depending on the state, these exemption certificates will expire after a set point in time. Now, I do appreciate your joining us today, and I'm going to pass this along for the closing by Dan.
Thanks to Karen. I'm sure everyone's going to pick up some tidbits and all that good information that you kind of supplied in all those areas for sure. I think one of the things that if you get anything out of this is don't take tax compliance lightly. As Karen kind of talked to you about, there's an awful lot of components. It's always changing. There are penalties and interests and all kinds of things associated with not being compliant. So it's our recommendation to make sure that you're doing whatever you need to do to be as compliant as possible when it comes to telecom tax. And hopefully we've given you some pointers here to kind of really help you if you're doing it internally, and if you're not, certainly help you kind of get some ideas of what you need to do it from an outsourcing standpoint. So really, if you're looking for any additional information that we really haven't supplied you in this webinar, you certainly can reach out to me either through my email or phone, and we'll get you whatever you need. If you're missing something, or if you heard something that you really want more information on, please reach out to us, and then we'll get you information as fast as we can. So I think we have a little time, Delaney, don't we, for maybe a couple questions before we end?
Yes, we do. And that was great, Dan and Karen. Thank you guys so much for your time. And before we do begin the Q&A portion of the presentation, I'd like to thank our audience for joining us today and review a few housekeeping items. The first reminder is that we're always interested in topics that you'd like to learn more about, so please submit your topic ideas in the Q&A box. In addition, the full webinar recording will be emailed to you within 2 days. Lastly, if you've submitted any questions during the presentation that don't get addressed in the live Q&A, we will be following up with you individually via email. Now, I'd like to ask a few questions from our audience. Our company has been collecting taxes and not remitting. What are our options?
Hi, it's Karen. Really, you have, and I'm definitely not an expert in this field, but if you do have a few options, and as always, it really depends on the state. And if you aren't under audit by the jurisdiction where you need to run that. So if it was brought up by audit that you haven't been collecting taxes, then really you needed some internal or some support in addressing or assisting with those audits. However, if you haven't been put under audit for that period, then really, technically you need to remit the tax, file the prior period returns. And most likely you'll have some penalty and interest associated with those returns as well. Now, another option is you could work with a jurisdiction on submitting a VDA or a voluntary disclosure agreement. And even that possibly only pay interest. But lastly, another option, it doesn't come up very often, especially nowadays, is you could also wait for a tax amnesty program offered by the jurisdiction, if it's available or when it's available. Of course, depending on the state, the program may waive penalty and interest associated with those back taxes. Thanks for the question.
And our company provides data services. Do these services fall under federal, state, and local tax jurisdictions?
I can take that, Karen. Yeah, this is one of the questions I'm kind of receiving with customers out there looking to move from even some of their agent models into a reseller models and their data or data center service. And the quick answer is yes, there are taxes associated at the state level and the federal level associated with the various types of data services. So I think the primary assumption that you should have is that they are going to be taxed, and you need to do the investigation and the research to kind of see what types of taxes that you're going to be obligated for your services as you go into the various states.
Well, that does look like those are all the questions that we have for today. Dan and Karen, thank you so much for your time, and enjoy the rest of your day, everyone.
Thanks everybody
everyone.
for joining today. Thank you
Thanks,
very much.
Delaney.